Welcome back to Invest Insights Pro. Every great team plays to a plan decided in the dressing room, not reinvented ball by ball in the middle. Yet most of us make money decisions the opposite way, from scratch, in the moment, swayed by whatever we just read or felt. Today, a freelance designer named Divya fixes that for good, by spending one weekend building a simple personal rulebook, a one-page risk framework she can follow for years. Meet Divya. She is 33, a freelance designer, and her income is lumpy, a big month, then a quiet one, no steady salary to anchor to. Because nothing was decided in advance, every single money question felt like a fresh, stressful guess. How much to keep safe? How much to invest? Should she react to the latest market headline? She was a captain with no game plan, resetting the field for every single ball, exhausting, and easy to get wrong. And here's the trap she was in. Redeciding your entire risk approach from scratch, over and over, is not just exhausting, it quietly hands the wheel to your mood. On a confident day she'd take too much risk, on a scary news day, too little. Without a pre-agreed plan, whatever she felt in the moment became the decision. The problem was never her judgment. It was that she was using judgment for things that should simply have been rules. So Invest-InsightsPRO gives her a single weekend task: replace the guessing with a one-page framework. Just 4 rules, written calmly, once, and then simply followed. A buffer rule for how much stays safe. An allocation rule matching money to its timeline. A concentration rule capping any single bet. And a crash rule that pre-decides her behavior when markets fall. It's the dressing room plan, set before the match, so the middle needs no new decisions. She starts writing. Rule 1, the buffer. Because her income is irregular, she keeps a full 9 months of expenses safe, more than a salaried person would need, exactly because her earnings are unpredictable. Rule 2, allocation by timeline. Anything she'll need within 3 years stays in safe instruments, everything longer term goes to equity funds to grow. 2 rules down, and already the 2 questions that used to stress her most each month simply have answers. Here's her finished page. Rule 3, concentration. No single fund or stock may exceed 15% of the total, so no one bet can ever sink her. Rule 4, the crash rule. In her own words, I keep my SIP running and never sell in a fall. 4 plain rules on one sheet. It isn't clever, and that's the point. Being decided in advance is the whole magic. When a good month arrives, she knows exactly where the money goes. When markets drop, she already knows she'll do nothing. First question for you. A year after writing your framework, your income has doubled and you have a child on the way. When should you revise the rules? Never, because rules are rules. Only after the next market crash? Or now, deliberately and calmly, to reflect your genuinely changed life? A framework must fit your real circumstances. A new dependent and a bigger income truly change what buffer and risk make sense. One more. A volatile, scary week has you tempted to rethink everything. But nothing in your written framework is actually triggered, no rule says act. What do? Rework the plan now, because the volatility must mean something? Sell a little to feel safe? Or follow the framework and do nothing? Remember, rewriting your rules in an emotional week is exactly how good frameworks get dismantled. The whole point is that noisy weeks require no new decisions. And the payoff was remarkable, not because the plan was clever, but because it was decided. When the next market drop came, the old Divya would have spiraled. The new one simply glanced at her one page, saw that nothing was triggered, and closed the app. A good framework, you'll notice, often tells you to do exactly nothing, and being able to trust that is what real calm feels like. She wasn't braver or smarter than before. She was just no longer deciding in the storm. Now build your own one-page framework this week. Write 1 line each, your buffer, in months, your allocation, matched to timeline, your concentration cap, so no single holding grows too large, and your crash rule, 1 plain sentence on what you'll do when markets fall. Then follow it, and change it only when your real life changes, calmly and on purpose, never in the middle of a market swing. That single page will do your hardest thinking for you, on the days you'd otherwise think worst. Here's the heart of the lab. A written personal framework converts an endless series of anxious, in-the-moment decisions into a few calm rules you simply follow. 3 to keep forever. 1. A framework turns constant judgment calls into settled rules. 2. Decide those rules calmly and in advance, never in the heat of a market move. 3. A good framework will often tell you to do nothing, and trusting that is the whole skill. Build your own, free, starting with a risk DNA assessment at app.invest-InsightsPRO.com. Your framework score is next.